Hello, entrepreneurs. Joe DeCharis, CPA, coming to you live from downtown Flushing, New York, once again for another amazing version of How to Win at Business. And I've been on a roll, folks, the last couple of weeks, I guess, because I'm in the stealth tax strategy mode. And I like being in this mode because it helps people, it helps save money, it helps streamline things. And basically, what it comes down to, I think, are just simple methods and procedures on what not to do. We, as entrepreneurs, we spend way too much time on stuff that doesn't really matter. Now, record keeping does matter. It does matter because your records have to back up with whatever's on your tax return. And if you've ever been audited, you know what I'm talking about. But let me, if you don't know me, I am a CPA. I specialize in working with very, very small businesses from, the idea of having a business. How do I incorporate? Should I incorporate? Basic bookkeeping, and really just fundamental business practices, because who knows about the fundamentals of accounting and bookkeeping and all the stuff that's really a mystery to most business owners. And it's a mystery by design, folks. It's confusing, it's complicated, because that's how they want it. And when I say they, I mean I'm talking about the machine, the large businesses, insurance companies, banks, the government, the IRS. We're over-regulated, we have too much compliance to deal with. On top of having to maintain a website and social media, who has time for bookkeeping and record keeping and stuff? But you have to have it. It's like, who wants to brush their teeth every day and go to the dentist twice a year? But you need your teeth, right? If you don't take care of your teeth, they're gonna, bad things are gonna happen. So tonight, what I'm going to talk about is something called the Minimis Rule, and it has to do with record keeping. And let me go into these slides here because I do have a couple. What we're talking about here are record keeping rules as they pertain to small businesses, because I think that most people know that they're supposed to keep records, but they really don't know what records to keep, how to keep them, where to keep them. And that's why there's a lot of confusion and wasted time and energy, a lot of wasted time and energy trying to sort receipts. If you're one of those people that are actually trying to follow the rules, you're probably spending a lot of time like sorting receipts, trying to match them up with whatever, without maybe even realizing why, just knowing that you have to do it. Because that's how I started in business. I didn't know what I had to keep. If you know my ice cream truck story, I kept records, but what I kept was a file with everything, but I didn't know what I was supposed to get. What I did was I got a log book, and I pretty much saved everything, like most people do, only to find out later that I didn't have to save everything. First thing is, why do we have to keep records? Besides that, it's just good business practices. Well, anytime somebody goes into a business, knowing or not knowing, and I talk about this a lot, the accidental entrepreneur, the accidental sole proprietor, Uber driver that doesn't know that they're going to have to file a Schedule C and get hit with self-employment taxes. But when you start a business, you're automatically under the jurisdiction of the IRS, for one. They want you to keep records because you're going to have to file a tax return with all of those transactions, okay? The numbers that go on your tax return are supposed to be accounted for. There's supposed to be a record-keeping system, because what the IRS says in this book, and this publication is, you know, where would anybody go if they're going to start a business? You're starting a business and keeping records. This is like the go-to thing, I guess, for small business owners. You know, I've been familiar with this publication for decades, and it's okay. It's okay. But what you have to remember is what's in here are really just suggestions. What the IRS says specifically is there is no set way to keep a set of books. In other words, there's not one way to keep your records. The result, there's only one result, which is a balance sheet and a P&L. But how you get there and how you keep track of things is entirely up to you. Now, there are documentation requirements. Okay, there are requirements. The bottom line, what the law is it says that your tax return, your books and records must clearly reflect what's on your tax return. So if you go backwards, if you take your tax return, you're supposed to say, okay, you have, you know, 300,000 in revenue. Where did you get that number from? So a good record keeping system will be able to trace back all the way from the transaction, let's say in the bank account, to a deposit, to an invoice, to a customer. So that's the sequence of events that you need documentation for. You might need the invoice to show what you got paid for, the deposit to show that you got paid and it went in your bank, and how you added it up to come to that number on your tax return. Now, most people have a bookkeeping system, like we use Wave a lot. We use Wave. So all of these transactions are actually automatically going from your bank account into your bookkeeping system. So there's already an electronic record being kept automatically. Now, the backup that you must keep on your end, now, if you're using Wave apps like I use Wave apps, and I invoice my clients, and that's another part of the paper trail. It's an electronic paper trail, but I can go directly from my profit and loss statement, and I could show, if I ever got audited, I could show the IRS every invoice and every corresponding deposit. And that's a record keeping system. Now, when it comes to the actual, you know, what do you have to save? What do you have to save? You know, a lot of people are still in this mode. They're saving paper documents. And there's no way around that. There'll never be a way around that, because I still get paper documents. And they got to be part of my record keeping system. The bottom line is that all of those records have to go into a centralized filing system, which we use Google Drive to do that. And it works. So all of those PDF documents, the invoices, everything, no matter how it comes in. If it's paper, I scan it, I name it, and it goes into my filing system. Now, what about the little bills? Because that's what we're talking about here. Those little bills that wind up going into a shoebox, or if you're Craig Duswalt, it goes into one of those Tupperware things with a label on it. And it becomes, if you want to, get down to it, if you're a hoarder, it's probably fun. And I'm not trying to make fun of hoarders, but it's a lot of paper. If you think about it, when people used to go through the toll booth, you get the toll receipt, $3. Well, now it's like $18, and it's all electronic. The taxi fares, everything, all those little papers, And the funny thing is, a lot of those receipts over time, especially the credit card receipts, they disintegrate, and then there's nothing on them. And I actually gave an IRS auditor a stack of those receipts. And I said, we kept the documents, I can't help it that the ink disappeared. But that showed that we were trying to follow the rules. The truth is that when it comes to those little expenses and the IRS is auditing them, they don't want to be bothered. They don't want to be bothered because a long time ago, there was a case called the Cohan case, the George M. Cohan rule, because he was an entertainer and he traveled all over the country and he didn't keep receipts. And the IRS disallowed all of his deductions. Long story short, it went to tax court, and his attorney claimed that, well, obviously, he's been on the road. There was all kinds of documentation of the shows that he did, and he had to travel. So obviously, he must have had expenses. And long story short, they came up with what they called the Cohan rule. Anything under $25, all you needed to do was document it. You didn't need a receipt. The IRS was looking for receipts. And up until that time, I guess that's the way it worked. But it was a famous case, and it was $25 for a long, long time. Now, because of inflation, I guess it's $75. And let me tell you something. This is not what do you call it? Now I lost my train of thought. But the bottom line is that, you're not going to see this rule in here. They don't want you to know about this. They don't have a publication called the Minimis Rule. Okay, they don't have that. What they tell you is you're supposed to keep books and records, blah, blah, blah. But the truth is that in today's economy, it's $75. And all you need to do is make sure that your tax return that matches what the numbers are in your P&L and your balance sheet. I mean, that's what a bookkeeper and an accountant does. That's what we do. And so the question is, how do you document those expenses? Because it still has to be documented. I mean, those little $25 expenses, Staples, the post office, the parking, they still have to be on your P&L. So the way that we do it is when we link up your bank account, your credit cards, and all of those transactions are coming in, it's being recorded, and then it's being classified. So we have a record. It's on your statement. It's part of your bookkeeping, and it's on your tax return, and that you have met the requirements of filing an accurate tax return. So you don't need the rubber bands and all those little paper receipts, and you don't need to go tracking down your medical stuff and all of that. It's really unnecessary, and it's one of those things that business owners wind up worrying about or spend way too much time on. So that's my story tonight, folks. I'm sticking with it. God bless. Thank you. Hey, Elizabeth, I didn't even notice that you were there. I was in the zone. I hope that we are doing our team meeting tonight. I'm getting prepared. All right, folks, that's it. You don't have to keep all those paper receipts. I hope that helped. See you tomorrow with another amazing version of How to Win at Business. Thank you.